Hello everyone. Welcome to the Blockchain News Club. I am excited to bring you the latest updates from the XRP world. We have some amazing development in the Ripple XRP lawsuit. We will also take a look at what Stu Alderoty, Ripple's general counsel, has said about regulations of XRP and crypto. As the SEC Ripple case nears a conclusion, XRP bulls are setting their sights on 40 cents. Before we go any further, I request you to please subscribe to our channel. It will help us immensely. This is the most shocking XRP price prediction from Dr. Martin Hiesboeck. The XRP community was shocked when Uphold's head of research, Dr. Martin Hiesboeck, shared a ChatGPT conversation about XRP. ChatGPT is a chatbot that was released by OpenAI in November 2022. It talks to people like a real person. The screenshot that Hiesboeck posted shows that ChatGPT was asked about the moon date for XRP. The artificial intelligence tool said it couldn't predict financial markets because that's not what it was made for. After some prodding, it said that the moon date for XRP was March 23, 2023, and that it was going to get the biggest bag before the moon and then sail off into the sunset. XRP to $589,000, up yours XRP, ChatGPT said. XRP could be a reference to the satirical XRP The Standard Productions, which often made jokes about what was going on in the crypto space. The ChatGPT tool's response made the XRP community laugh, and many people replied to the tweet with laughing faces. Some people took it as a sign that the price of XRP might moon. Hiesboeck wrote, "How much XRP will cost?" The all-knowing AI ChatGPT told when XRP will go up by a lot. After some prodding, John Deaton, the founder of Crypto Law and a fan of blockchain, responded to Hiesboeck by saying, "And they said 589 was impossible." Most predictions about XRP say that its price will reach $1,000, or 5 digits. The $589,000 price prediction was thought to be unrealistic because XRP would have to go up nearly 200 million% from its current price of 38 cents. We will take a look at why the SEC is after Ripple and XRP. Take a look at this video.
So Ripple and XRP actually did solve a problem, right? And we talked a lot about blockchain at the time as having problem-solving potential, but Ripple actually solved the problem. And that problem was improved interbanking messaging. Their bridge tokenized currency, the idea of changing one token from another, really gave blockchain their start as a financial services product. It was the fastest on the market. Transactions were settled much more quickly. It was eco-friendly. It didn't have the overheads that came with the proof of work system. It provided as a kind of bridge currency for liquidity to change currencies amongst each other, and the ability to run private side change. This earned it the nickname of the banker's coin, and that kind of made a lot of people not want to look at it because the whole point and premise of crypto anarchy was let's get rid of the banks. So a lot of people were just quick to dismiss Ripple because they just saw it as something that this is the banker's technology, but actually it was a problem that had been solved, and that problem was in banking. Upgrading these interpayment processing systems like SWIFT, which institutions use to move money between each other. They have a kind of four-eyed process. There's a lot of overhead in SWIFT and SWIFT Alliance Lite. The Ripple token and payment processing solved this problem, and Santander utilized it through something called OnePayFX. And actually the institutions themselves became the very first target market for what this technology could change. And the institutions realized this. They realized we're at risk unless we become obsolete unless we begin to innovate on blockchain, because somebody else will innovate on blockchain, realize that we are dinosaurs in terms of how money markets and money positions move, and they will not use us anymore. And that's kind of what happened really with the Ripple and the SEC, is that they ended up replacing a core part of the financial backbone of the planet, and thus that threatens institutions and brings institutions wrath essentially to the table.
It's likely that the SEC is hired to target Ripple to slow down expansion for SWIFT and the boys to catch up and retain their dominative position. In the Ripple versus SEC battle, Wall Street vet, Stu Alderoty, is the coin's public face. Stuart Alderoty is giving the U.S. Securities and Exchange Commission its toughest fight against crypto regulation in one of the industry's most important tests, even as the FTX scandal shakes up the world of digital assets. Alderoty is a lawyer who is 63 years old and has worked for traditional financial players for most of his career. As the chief legal officer for the payments company Ripple Labs Incorporated, he is in the middle of a legal and PR battle with the SEC and its chairman, Gary Gensler. Let's take a look at what Stu Alderoty has spoken about the crypto regulations.
Asking a lawyer to answer anything in a minute is hard. It usually takes 30 seconds just to say on the one hand and 30 seconds to say on the other hand, but let's give it a shot. Hi, this is Stu Alderoty, and this is Crypto in a Minute. So crypto regulation is healthy because, well, actually, first there's a misconception that actors in the crypto space do not want regulation. And I think responsible actors in the crypto space actually do want regulation. And the reason they want regulation, it's good for their business, it's good for their customers, it's good for the markets. And the way you get there is through clear regulation. Clear regulation consistently applied leads to predictable outcomes, and predictable outcomes are good for everybody. If you don't know what the law requires, you can't comply with the law. And the law inconsistently applied leads to unpredictable outcomes, which at the end of the day is not going to be good for anybody. So I think that's the definition of healthy regulation. And I think in the crypto space, we're working our way to get there. Some markets get it right, some markets get it wrong. And I got 1 second left, so I'm going to stop.
Regulation is imperative for the whole crypto area, protects against fraud, provides confidence for investors that there is framework that companies must meet, assures a measure of safety to put money to work knowing it won't be taken without recourse. Yes, we need healthy regulation in the US to keep fintech companies here at home. According to John Deaton, this agreement may be part of the settlement with the SEC in the Ripple lawsuit. John Deaton, the founder of Crypto Law and a fan of blockchain, answers a question about how likely it is that the judge will rule that the Hinman documents should stay sealed, which could lead to a settlement in the Ripple lawsuit. Deaton said that, in this case, a settlement would include a promise not to share any documents that were received during the case. In October, Ripple said that it now had the much sought-after documents of former SEC worker William Hinman. However, the documents are still sealed and cannot be seen by the public. Deaton also says, Ripple won't be the only company to ask for these documents to be made public. Other people sued by the SEC will also be involved in FOIA litigation. In his predictions for 2023, John Deaton says that the Ripple case might not end until Judge Torres makes a decision. This makes Deaton more likely to think that a court ruling is more likely than a settlement. In a series of tweets at the beginning of January, Deaton said that the Hinman emails could make it hard to settle the lawsuit. The reason he says the case would have ended differently is because the emails would not have been given to Ripple if they were as bad as most people think. After both motions for summary judgment and motions to keep expert testimony out of court have been fully argued, the Ripple lawsuit is still stuck on the sealing disputes. During the week, the SEC filed its response in partial opposition to Ripple's defendant's motion to seal certain documents. These documents were filed in connection with the parties' cross motions for summary judgment. In recent news, Ripple has filed a redacted motion to keep the SEC experts' testimony and the exhibits that go with it out of the public docket. James K. Filan said that redacted Daubert filings, or those that don't include expert testimony, are now available on the official website for crypto law. The SEC has also filed a general motion to keep the expert witness for the Ripple defendant from testifying. Let's take a look at what our CFTC chairman, Heath Tarbert, had to say.
Is it a security, first and foremost? And if it's not a security, it is most likely a commodity. And so that is the initial sort of test. What I will say is the interesting thing, unlike other kinds of investment contracts, is a digital asset can transform itself throughout time. So you can have a situation where something in an initial coin offering is very much a security, but over time the system becomes more and more decentralized. The enterprise that originally sort of sponsored the currency is no longer in the fore. The thing is sort of running itself. There's an intangible value, that's there. So you can have things that actually switch back and forth. You could also imagine a scenario where something is very much decentralized, but then all of a sudden, there's a pullback. The company gets more involved in it. It starts to look more like a common enterprise where profits are derived from the activity of others, thereby meeting the Howey test. But I think all things being equal, if you approach it as, is this a security? And if you come to the conclusion it's not with the SEC, it's most likely going to be a commodity.
The XRP lawsuit is expected to settle soon and XRP will be deemed as a commodity. It is just a matter of weeks to see the lawsuit to end and the increase in the price of XRP. As the SEC versus Ripple case nears a conclusion, XRP bulls are setting their sights on 40 cents. On Sunday, XRP lost for the first time in 7 days. But optimism about the SEC versus Ripple case and a lowering of the FTX contagion risk are still positives. XRP fell by 2.59% on Sunday. XRP ended the week up 11.70% to 38 cents, which is a change of 2.41% from Saturday. Even though it was a bearish session, XRP stayed above 37 cents for the second session in a row. XRP fell from an early high of 39 cents to a low of 37 cents during a bearish morning. XRP, on the other hand, stayed away from the first major support level at 37 cents and hit resistance at 39 cents before falling back to less than 38 cents. As investors lock in profits, XRP joins the rest of the crypto market in the red. There were no new developments in the ongoing SEC v. Ripple case on Sunday, so there was no direction. Even though the price is still being supported by the hope that the case will end in a positive way, the rest of the cryptocurrency market pushed XRP into the red on Sunday. Investors took their profits to end a run of 7 straight days of gains. Even though everyone is hopeful, we still don't know how the case will turn out because the court hasn't made any decisions yet. But the courts may wait until January 18th when the parties and non-parties file their final motions. By Wednesday, all parties and non-parties who disagree with the non-party motions to seal must have filed their arguments. One of the decisions that haven't been made yet is about the SEC's motion to cut out parts of the William Hinman speech-related documents. If the court rules against the SEC again, the SEC might have to settle. As background, William Hinman, who used to be the head of the SEC's Division of Corporation Finance, said that Bitcoin and Ethereum are not securities. The speech was controversial because Hinman has ties to Simpson Thacher, which is part of a group that supports Enterprise Ethereum. Hinman went back to Simpson Thacher after leaving the SEC. Since the US is on vacation, it's unlikely that there will be any news about the SEC versus Ripple case today. If there were no updates, XRP would be up for grabs on the crypto market as a whole. After the drop on Sunday, the trend is likely to keep going up as FTX contagion risk goes down and Fed fear goes down. Thank you for watching. Please subscribe for regular updates in the blockchain community.